Hello, fellow traders worldwide. This is Gabriel here again, and welcome back to my channel, Forex.Real.Trader coaching sessions. Now with another educational video about bearish candlestick patterns. Today's video is about a very interesting and powerful pattern. I am talking about the Tweezer Tops. The Tweezer Tops are basically a bearish reversal candlestick pattern. It appears at the top of an uptrend or at the top of a reversal, signaling a potential shift from bullish to bearish. It consists of two consecutive candles with nearly, if not identical highs. And this is a powerful indicator that a strong resistance and a possible price reversal is taking part in here. Let's see the picture in here. How we can understand this one. You can observe that there is a bull move, right? And the last candle, the bull candle here, remember that the bull candles open low, right, and close high. And the bear candles open high and close low. In this context, for the Tweezer Tops, both candles, right, have the same line as a resistance. What is that? That the closing of the bull candle is now the resistance in the moment of the opening of the bear candle. That is a strong indicator. It has to be nearly exactly or exactly the same resistance line. Right? So this is how we can interpret. Now, let's see this pattern on our charts. Here we have this one. I previously searched for the pattern. It's not very common. For that reason, when it appears, it's worth taking into account the different indications that the pattern is showing. Of course, and once again, I tell you, it would be irresponsible if we just focus on a candlestick pattern to execute a trade. No, we need confirmation from other indicators. We need confirmation from other tools that we have in our trading platform. So look at this. As you can observe here, we have that Tweezer Tops. It appeared, look at this, this is a downtrend movement, right? So I have this rally, this correction, this rally, and right here appeared my Tweezer Tops. So as I can evidence in here with this line that I traced on my charts, you can see that they have exactly the same resistance. So the closing of the bull candle is the opening of the bear candle. That is the first thing, right? So first is same open and same close for both candles. What is the second indicator? Some traders used to work with the very bearish candle in order to place the trade. I prefer to wait for confirmation, okay? And here is another important aspect, and it has to do with the closing of the bear candle. As you can see, this candle, the bear candle, closed a little bit below the bull candle. It means that there is confidence in the bear move, right? So that is a good signal. Other traders prefer, as I show here in this example, some other traders prefer to, take into account this one as a valid Tweezer top. The thing is that the red candle closed not below the bull candle. It closed in between around 70-80% of the body of the bull candle. Personally, I do not like to trade these kind of tweezer tops, right? Because the ideal thing is to wait for the confirmation, right? And somehow there is a larger room for the stop loss. So for me, it's more valid this one here, right? Because the red candle, the bear, closed below the opening of the previous candle, right? So this is the second thing to bear in mind, that the bear candle closes below, right, the opening of the bull candle. I mean, my close is here, okay? So that is good. And they have exactly the same opening and closing line. That is perfect, okay? Now, how to trade it? Before I execute the trade, I need confirmation from other tools. The Tweezer Tops agree very well with Fibonacci and MACD. Let's see in this case what happens. If we check our MACD line, okay, here, I can see that the sentiment is still bullish, right? But the Tweezer top appeared. For this reason, it's very important to wait for the third candle confirmation. What is that confirmation? Is the one provided by this very bear candle. So my entry point might be right here when this candle closes. So this could be my entry point. Okay, this is my entry here. Why? Because now I can observe that the Tweezer tops are ready. So the pattern is confirmed. The next candle, this one, is a very strong bear candle, giving me more force to confirm that the trend is somehow shifting from bull to bear. Okay, and I can see now that there is a movement from the red line in here, from the MACD, showing me that it is getting strength in order to become a bear move. Now let's check with our Fibonacci's. I like to use the Fibonacci retracement tool. So I'll place it right here and here, and we can see something that is very interesting. There is somehow a natural resistance over this part. Yes, the Tweezer top somehow open and close above the 61.8 resistance of the Fibonacci. However, my third confirmation candle, this one here, okay, this candle closed below, right, the 61.8 and even the 50, right? So it's giving me a valid entry point. So I set my entry point right here on the Fibonacci 50 level, right? Remember that the valid, or the ones the traders take into account as important, meaningful resistance or support levels from the Fibonacci are 61.8, 50, and 38.2. In this case, we can see a valid resistance, right, on this 50% Fibonacci level. All right, so that is my entry point. Now, where should I place my stop loss? Ideally, I should place it here, right, above the wick of the red candle. So this is my stop loss. If I am aiming at take profit, that could be, of course, something that I want to take as a worth, okay, trade. Remember that always my take profit has to be twice or at least 1.5 bigger than the stop loss. So for instance, if I have it here on this trade, my stop loss is here, 5 pips. So it should be at least 15 pips, right? So 15, look at this, it's awesome how it works. Look at this, it's nearly, okay, I have 14.4 pips, nearly the zero level of the Fibonacci. Okay, let's be a little bit closer to the 15 pips. Here, this is it. So I'm going to set my take profit right here, okay? So it would be right here. So look at this. The room for earnings is very nice, right? So I am placing it here. I have my stop loss is equals 5 pips, right? And my take profit is equals 15 pips. So my ratio here is 1, 2, 3. That is good. That is the way how I have to place my trades. Of course, I insist along the course, I will tell you exactly how to place your trade with the appropriate leverage, with the appropriate money management. But now what I'm doing is just showing you how to spot candlestick patterns. And if my trading plan and all the indications are in agreement with this trade, so I'm going to place it. But it doesn't mean that I am using only this Tweezer Tops as my leading indicator to place the trade. No, I'm just telling you that along with other indicators, I can somehow, okay, place a trade. But it's just because I spot the pattern. Remember, every time we trade, we need to follow our trading plan. Okay, it has to be a must. It has to be an obligation. This is a matter of discipline to follow everything that I have in my trading plan, right? So this is basically how we can spot Tweezer Tops, how reliable they are, and how we can work with them along with the MACD, the indicator that you can see on the screen, also with meaningful patterns and resistances shown by the Fibonacci tool, right? So my dear traders, just a little reminder, if you find this contents on my video and my channel, the information in here that I provide is something useful, interesting, and somehow important in your trading learning process, please subscribe, like, and share to continue building a well-informed community of retail traders. So my dear traders, thank you very much and see you in the next video.